Hello, this is Patrick. Welcome to Chart Built Wealth Profitable Investing with Technical Analysis. I'm going back to a buy rating on natural gas today. I use the ETF UNG, and I'm also going to cover my two current buy recommendations, crude oil and gold/silver. I think they both still look great. So let's get into it. Before I do, though, let me just comment on the overall equity market because I get a lot of questions on that. I'm not bullish on the equity market, and I haven't been. My followers know I had probably seven or eight buy recommendations back a few months ago, and that has slowly dwindled. And it's interesting how the charts anticipate when you see stocks start to break down, that's usually an omen that the equity market's going to go down. So just wanted to touch base on that. So let's get into natural gas. So this is big picture, and I will reference my original video a few months ago when I went to a buy rating and then quickly went to a neutral, basically flat on that trade suggesting prices were going to go down, which they have about 4.5%. Now I'm reinitiating, but this is the big picture uh, on natural gas, and so I see a five-wave advance from the low in early 2024, and there's some overlap here. So this is not a you know some Elliott wave. Technicians would probably scoff at this, but I've learned after doing this for 30 years that on things as volatile as natural gas, especially on the first leg up, you're going to have not perfect patterns, but I see wave one, wave two, wave three, which fits, it's the largest, and then a wave four, but we got some overlap here. So that, that would not be a textbook Elliott wave, fourth wave, and then we got our fifth wave up to the high. Um, and then we got a three-wave decline into a wave two low. So I think that's okay. It's created a bullish channel for us here. And where I think we are now is heading into a third wave. And, I'm in oil right now in a third of a third wave. And as I've told my listeners that, I look for third of third waves. Those are the most profitable. They're real. They can explode. They can be really, really big moves. And so I see the same thing setting up here now for natural gas. So we got a one and a two, and now within this big third wave, we're going to get a five-wave advance. So we got our first wave, our second wave. It looks like it's complete. It could, go down a shade, but I don't see a big decline from here. And given what's in front of us, a third of a third, this could be really big, and I do not want to miss it. So that's where we're at on the big picture stuff. Once we get done with the big third wave, which could take months, we'll get a fourth wave correction or a sideways correction, and then we'll get a fifth wave, another push to new highs. So going to a buy rating, and this is what UNG, the ETF, looks like. So within the third of this is the top of the first wave. This is the bottom of the second wave. I should have labeled that. I'm sorry. I tried to get involved here. I went to a neutral, pretty, flat. It might have, maybe it was, it was up like 60 cents. So it was up like 5% when I got out of that. I initiated with a buy here again. Again, I don't want to miss this. And then it started going sideways in the form of a symmetrical triangle. You can see these two converging trend lines. And I thought that was going to be a breakout to the upside. Usually they're continuations, but when it broke down on this big down bar, I measured the base of this triangle and it projected to 1030. And so I went to a neutral here because it could have been 230, but it could have went lower. So I was going to just step back and see what happens. So I took a God, I don't know. That might have been I think it was a 7 or 8% loss. And now it's drifted 4.5% lower here. Let's take a look at that. So this is when I went to a neutral, projecting 1030, and here's where we are, 1030 basically, 1051, because it was up a little bit on Friday, but you can see we have a bullish hammer here. So, I don't want to see this thing break down below 1018, but this could be the low right here. This could be our the next move could be a third of a third wave, which would be explosive. So that's natural gas. Seasonality too is in our favor. Here we are with a low in early July, and then a higher low in early August. But this is the low, and again, seasonality is only a tendency, but it's certainly something you'd like to have in your favor. So bullish on natural gas. Here's crude. I just wanted to touch on this. It's been explosive both ways, and so we are going into this is a third of a third wave also. You'd have to go back to, I think it was 2020 when it got down to $10, and we had a five wave up, second wave down. And here's where I got bullish, and we're going into a third of a third wave, and we've had wave one, wave two, which was a deep retracement. It looked to me like wave two was going to be a sideways triangle. It was not. It broke down. I went to a buy recommendation on June 18th. At 76, 70, 52, it traded down. I noticed this gap down here and it filled that. I reiterated the buy down here, and now prices are higher. They had a huge week, up 15.5%. So what was I doing last week? I was selling. I sold probably 10% of my holdings on Friday. So, if I had 100 shares of USO, I sold 10 of those shares. I don't think so. Wave one and wave two of the third wave. So we're entering a third of a third, right? And so we'll have five distinct legs going up into the top of the third wave. You can see for the week, we still haven't cleared this cluster of moving averages. We're kind of hitting right on the outer edge of that. So I want to see some more follow through here. That would be really key. And now so if you can visualize, we're going into a third of a third, which are explosive. Just so let's take a look at the daily chart of this, which will show this part here. Okay, so there we go, up into the top of the first wave. We got up to 10 out of 10 investors wanting to buy crude oil here. These are contrarian indicators. Sentiment is key when you get into anything over 90% bulls and down to anything 10 or lower on bears. You're probably near a bottom. If I had to take one indicator, that would probably be it. And luckily, I can get this. I can get this again from TradeFutures.com, Jake Bernstein's group, which has been around since the 70s. And so down at the low of 2, we got down to 10% bulls. So that was signaling a low. So here we go into a five-wave advance, our first five-wave advance of our third wave. And, when I look at this, I see 1, 2, 3, a small little triangle here, 4, and we're pushing into a 5. So, that's why I sold 10% of mine. So, what I do think, though, is we're going to push higher here, maybe up to around the 90 mark, and that would bring our cluster of moving averages all together. We get this would be too good to be true, but I do kind of expect that we get a bullish rainbow convergence with prices up around 990, and bring all these moving averages together. And then this would be our support down at around 80. And so, I could see 90 and then get some sort of a correction down to the 80 mark. So, I sold 10% on Friday. We get up here, I'll sell another 10% or 15%. And then I don't want to sell too much because we're in a third of a third, right? So I'm just scaling back. I'm just protecting my profits. And that's what I'm doing. So we get a second wave retracement, which within our big third wave, I would be buying back here aggressively because we'd be then going into a third of a third. So I'd even maybe buy more than I had initially because then I see that the trend is up and I can jump on the pullback. So by that time, you'll get a lot of trend following hedge funds. That's generally what they do. They're not good at the turns, but they're good at following trends. So that's kind of where that's at. I hope it's helpful. And this is USO, right? So this is the ETF that, I buy. Um, Again, one, two, three, small fourth wave, and then a fifth wave within our first first wave of our third wave. I still expect this to push up. These are Akamoto clouds. These are what Eastern market technicians use instead of trend lines, bullish trend lines. They use these area kind of clouds. So we push up to the top, and this says this is resistance, and then we come down. We get a rainbow convergence, like I showed you on the actual crude chart prior to this. Bring all these clusters together, and then we get some sort of a correction down here. Here's my Fibonacci retracement levels. These are normal retracements. And, 38% of this advance, or 50% of that advance, or 61.8% of that advance. And then, we go higher. But I'd look for USO to push up here and then to come back to this confluence of moving averages. It doesn't have to, it could, but normally when these lines come together, if it doesn't retrace, it will at least stop its upward momentum a little bit. So that's kind of where we're at. So I've sold 5% on Friday. I'll sell, I'm sorry, 10% on Friday. I'll sell another 10 to 15% if it pushes up here. Sorry, that's duplicate. Gold and the metals. I'm just going to cover gold because silver looks like gold. It's a little more erratic, but that's what you get for a more volatile security, silver versus gold. I prefer gold always over silver because a little bit less volatility, but a little less upside. But I like it also because gold is a safety uh, metal, precious metal. So, and in this environment with all the protectionism of countries and people taking money out of other markets because they don't trust it and all those good things, I think gold is ready for another leg up. I initiated on July 3rd at 41.22. With all the bouncing around here, we're at 40.16. I've a couple times I've said when gold has been down and oil's been up, I've sold a couple shares of oil and I bought gold and I've added to my gold position. And then when gold is up, I sell a few of those shares and then when it's down, I buy more shares than I sold and I increase my size of my position that way. So here's where we're at, and I believe we're going into a fifth. We're going into a big fifth wave. This was a big third wave. Here's the fourth wave. But within the fifth wave, we're getting ready to go into a third of a fifth wave. So again, we like those third waves within wave three or wave five. They're profitable. This is the daily chart. Let me give you some context here. So it's just this part right here. And here we have a bullish wedge. It's folding down against the grain. It's counterintuitive. You think this is bearish, but it's actually bullish. And the fact that you got all these overlapping waves. And so here we go. And we got a pushback and we got a nice positive divergence on our relative strength index, RSI. We've hit lower lows and we got higher lows on our Relative strength index chart that's flashing a caution sign. Beware, a change of trend is coming. We got a nice little bullish hammer on Friday. We've had a series of bullish hammers here. I wish I had volume on the gold futures chart, but I don't. And here's seasonality. We are in the sweet spot for gold beginning July 1st. And this should, this is when you want to buy it. This is the weakest part of the year. And luckily we weren't in it at that time. So this is just a tendency, but you certainly like it in your favor. Thank you for watching Chart Built Wealth, profitable investing with technical analysis. Please like and subscribe. Give me some comments. Give me feedback. Have a great rest of your weekend. Adios.